Welcome to the RE1 and RE5 study lesson on the scope of the FAIS Act, Part 3. In this lesson, we continue with the definitions of a financial product and a client. As a quick revision of Part 2, a financial service is defined as advice and/or an intermediary service, given by any form or medium. Advice is opinion-based information that is changeable. An intermediary service involves a middleman action, where the product supplier and the FSP are separate entities. A financial product is essentially a product that promises to pay financially in the future. The FAIS Act defines a financial product broadly as any product sold in South Africa that includes elements of insurance or investment, such as insurance policies, bank deposits, pension fund benefits, collective investment schemes, and similar products. This definition also includes foreign products and bundled products sold in South Africa. Although the definition is long, the practical test is simple. When deciding whether something is a financial product for FAIS purposes, we ask only two questions. Is the product sold in South Africa? And is it insurance or an investment, meaning a promise to pay financially in the future? The currency of payment and the country where the product supplier is based are irrelevant. What matters is that the product is sold in South Africa and that it involves insurance or investment. For example, if a client in South Africa is advised to take out a bank account issued by the Bank of England and denominated in euros, it is still regarded as a financial product. A common exam mistake is to treat loans as financial products. Loans are credit products, not financial products. With a bank deposit, the bank promises to pay the client in the future. With a loan, it is the client who promises to pay in the future, which is why loans fall outside the definition of a financial product under the FAIS Act. This slide tests your ability to identify financial products for purposes of the FAIS Act. When answering questions like this, apply the practical test. Is the product sold in South Africa? And does it involve a promise to perform financially in the future through insurance or an investment? Option 1, a unit trust investment, is a collective investment scheme and therefore a financial product. Option 2, a rewards card offering grocery discounts, is not a financial product. It is a loyalty or marketing benefit and does not involve insurance or investment. Option 3, a term life insurance policy, is a financial product because it promises a future benefit on the occurrence of an insured event. Option 4, a structured deposit with capital protection and fixed returns, is also a financial product, as it involves a promise to pay financially in the future. Option 5, a short-term personal loan, is not a financial product. Loans are credit products because the client promises to pay in the future. The correct financial products in this list are options 1, 3, and 4. We now consider the definition of the final element, a client. The FAIS Act defines a client as any person or group of persons to whom a financial service is intentionally rendered. The definition excludes the general public, but includes beneficiaries and successors in title. What matters is not whether the service is rendered to one person or many, but whether the recipient's circumstances are known. If circumstances are known, judgment can be exercised, and the recipients are regarded as clients. If circumstances are unknown, as with the general public, they are not clients. For example, a person receiving opinion-based information in passing is not a client. However, a defined group such as a teachers' union with shared and known circumstances is regarded as a client. The definition also includes beneficiaries and successors in title. This ensures continuity of rights where a financial product performs in the future. A beneficiary may pursue a claim after the policyholder's death, and a successor in title may enforce rights under a policy taken out by a previous officeholder. This slide tests your understanding of who qualifies as a client under the FAIS Act. In the first scenario, SIFO attends a retirement planning presentation aimed at employees of a teachers' union. Although it involves many people, it is a defined group with shared circumstances, so they are regarded as clients. In the second scenario, Zuko picks up a general leaflet from a public display stand. This information is directed at the general public, not a specific person or group, so Zuko is not a client. In the third scenario, Lorado is the nominated beneficiary of her late mother's life policy and queries a declined claim. Beneficiaries are included in the definition of a client, so she qualifies as a client. In the fourth scenario, Mr. Delamini submits a claim under a policy taken out by the previous managing director. As the successor in title, he is also regarded as a client. The key exam takeaway is to apply the legal definition of a client, and not everyday assumptions. The general public is excluded, while beneficiaries and successors in title are included. Now that we have covered all three jurisdictional elements, let us return to the earlier taxi rank pamphlet scenario. We ask again whether a person handing out a pamphlet reading Best Funeral Policy, suitable to all working South Africans, is regulated under the FAIS Act. We apply the crossroad questions. First, we ask whether this is information or an action. It is information, so we ignore the medium and focus only on the message. Next, we ask whether the information would change if the person's circumstances change. The message is opinion-based, as it would no longer apply if the person is not working. This means advice is being given, and a financial service is present. We then test for a financial product. A funeral policy is sold in South Africa and promises to pay financially in the future, so this element is also present. Finally, we test for a client. The pamphlet is handed out to people at a taxi rank who form part of the general public. Their circumstances are unknown, and the general public is excluded from the definition of a client. Because the client element is missing, the interaction is not regulated under the FAIS Act. The key exam lesson is that the correct reason is the absence of a client, not that it is just a pamphlet or just marketing. We will now analyze which of these actions fall within the ambit of the FAIS Act. Remember, all three elements, financial service, financial product, and client, must be present for the FAIS Act to apply. Option A involves recommending members of a church group to take out payday loans. We first test for a financial service. The word recommending indicates opinion-based information, so advice is given and the financial service element is present. Next, we test for a financial product. A payday loan is a credit product, not a financial product under the FAIS Act. This element is not present. We can accept that the church group qualifies as a group of persons and therefore as a client. However, because the financial product element is missing, the interaction does not fall within the scope of the FAIS Act and is not regulated. This illustrates why each element must be tested separately. Even where advice and a client are present, FAIS will not apply unless the product is a financial product. Option B involves handing out a pamphlet setting out specifications of a funeral policy to union members. We first test for a financial service. Information is given, but we ignore the medium and focus on the message. The pamphlet contains factual specifications and no opinion or judgment. Therefore, no advice or intermediary service is rendered, and the financial service element is not present. We then test for a financial product. A funeral policy is a financial product, so this element is present. We can also accept that union members qualify as a group of persons, and therefore as a client. However, because no financial service is rendered, one of the required elements is missing. The interaction is therefore not regulated under the FAIS Act. Option C, advertising a bank account in a newspaper, involves a financial product, but it's directed at the general public, so there is no client. Therefore, FAIS does not apply. Option D involves giving a client a leaflet stating the advantages of taking out household cover when an appliance is purchased. We first test for a financial service. Information is being given, and we ignore the medium and focus on the message. The leaflet highlights advantages, which is opinion-based information that would change depending on the client's circumstances. This means advice is being rendered, and the financial service element is present. Next, we test for a financial product. Household insurance is a financial product, so this element is present. We then test for a client. The information is given to a specific client who has just purchased an appliance, meaning their circumstances are known. The client element is therefore present. Because all three jurisdictional elements are present, this interaction falls within the scope of the FAIS Act. This option often challenges learners' intuition. Many argue that it cannot be correct for a salesperson or packer to require authorization simply for handing out a leaflet. However, option D is based on an actual court case. The court found that providing opinion-based information constituted advice, and therefore a regulated activity under FAIS. This illustrates that legal definitions are intentionally broad, and that overregulation occurs first, with exemptions introduced later through regulatory guidance. From a compliance perspective, this highlights the responsibility of the key individual to identify all activities that may constitute financial services, and to apply for exemptions where appropriate. In summary, an interaction is FAIS regulated only if it includes a financial service, a financial product, and a client simultaneously. Use the core rules for each element as a structured checklist in your compliance decisions and exam questions.